All right. Good morning, everybody. We've been given the go ahead to start. So, uh, today's topic is very simple. Why milestones to wealth? We also had the conclave, which was a very big success. So, thank you all for your support, and I hope that everybody was able to join in hassle-free, look at it offline, online, and thank you all so much for your support. So, this topic is very simple. Why milestones to wealth? So, what is it that milestones to wealth can do for you? Okay, and it's a very short presentation. And any of you who have already been on uh, on my webinars would know that there's a lot of stuff that can get repetitive from other presentations. So please bear with me on that. But other than that, I'll make it short, sweet, so that we can have a lot of time for Q&A. Right. So first, Milestones to Wealth is a behavior-oriented program. It is not a platform that gives you buy and sell recommendation like Zero the Opera. Right. Though we have communication that goes out saying, this can be a good opportunity for you based on your portfolio, based on your risk appetite. But however, it is not a platform like Grow or Zerodha that gives you buy and sell recommendation. Right. It is a behavior oriented program. Now, why behavior oriented? Right. Now, see, for example, market cycles work in phases, right? And over a long period of time, you see market cycles play out like this. And short periods, you would see bouts of it go down. And then long term also, you would see something like this, right? So what happens during that point is that there is a phase of over optimism, which means everybody is greedy, which means everybody is telling you to do this, buy this, do that, see me, my portfolio, I did this. And you start getting more and more tips from people on stocks, ETFs, mutual funds, and the list keeps on going on, right? And then you see media also on Twitter, on on the newspaper channel, on news channels, everywhere you see extreme optimism. You say India is the only country that's going to grow 8%. India is trading at such a high premium to other countries because of the growth. You'll see a lot of stuff that comes there, which highlights over optimism. In phases of optimism and over optimism, people tend to get greedy. Greedy in the sense, uh, you're greedy for the last 10% of the entire 90% that you've made, right? On the flip side, there is fear. There is extreme pessimism. You're very, very scared. People are very scared. They only start talking negatively about one particular asset class. See, today, for the last 2 years, you've only seen equity as an asset class do very well. So that's why you see extreme over optimism on that side. Okay? Everybody is talking about equity. Nobody wants to talk about debt. Nobody wants to talk about anything. Anything below 22-25% is not worth some people's time. That's the impression that we've also been getting over the last 2 years, right? But so they don't want to talk about debt. They do not want to talk about gold. They do not want to talk about silver. They do not want to talk about all these conservative asset class, so-called conservative asset classes. It's not conservative at all. There's a lot of risk involved in both, right? So you see over optimism taking place in one asset category, and then you see pessimism taking place in another asset category, right? So this is why behavior is very important, because we help you identify and make sure that you participate in periods where there is a lot of pessimism, where the participation level starts going up, where you are being trained to create certain habits, right? And only then you will be able to take advantage of bad scenarios in the market, or not so great. Bad doesn't mean that the market is going to go down. Bad can also mean that it stays here for a long period of time and you don't see incremental returns coming in from equity, right? So we make sure that you always participate across asset categories. And then when the time comes for you to have to be in that phase of over optimism, to be in that phase of gray, then you automatically know what you need to do. Right. So in today's market, if you see equity is in a complete over optimism phase. Debt, gold, and silver, precious metals, they are all on the pessimism side. Right. And whoever has been on the platform would know our stance completely on debt and on We've continuously been giving a lot of content out there. We've done multiple webinars. We have multiple webinars coming up also regarding the same category. So you know where we are sort of headed, right? And that can only happen if behavior comes out on top of price always. Right? Now, champions don't do extraordinary things; they do ordinary things, right? I'm sure most of you would know about the boring portfolio, right? But they do them without thinking too fast for the other team to react. They follow the habits they have learned, right? So there's nothing extraordinary that Milestones2Wealth actually does. It just does two ordinary things for people. And this is not something that we suddenly realize that people have to do. No, this has been happening for the last 30 years. This is what success has actually meant for investors who have invested for a long period of time, who have been able to create wealth for themselves. Right. First one is to create a savings habit, which means that you have to think about saving every day. You need to review your savings every week. You need to strive to do more. See, today inflation is extremely high. You're spending a lot on entertainment. To be very fair, entertainment costs are very high. Dining out expenses are very high, right? In terms of goals, education costs is going up. Travel costs are going up, right? And this is across India. This is across the world, right? So, and if you just see your fruits and vegetables, they have also gone up drastically. Right. So there is a lot of inflation that's there, and this inflation is here to stay. So if you look at what the RBI says, it's somewhere between 4 plus minus 2. But if you see household inflation, it is somewhere between 12%, 11.5%. I would say 11 plus minus 2. That's what I would say for household inflation. Right. So your household expenses are growing by that much. So this is why you need to first try and have a review system as to where you're spending. Write down each and every point as to where your money is actually going, categorize them, and then you will know that, okay, at the end of the month, this is where most of my money is going. How do I cut my expenses here on? Right. So you have to think about saving every day. That doesn't mean live a frugal life. That just means make sure that you are not doing uh, baseless expenses here and there. 4 Swiggy orders can be cut to 2 Swiggy orders or 1 Swiggy order, right? That doesn't mean that you have to give up on your lifestyle, right? It only means that where you have to make a cut, where you can do without it, please go ahead and do without it. You don't need to have 4 subscription. You don't need to have Hotstar, Netflix, Sony, Geo. You don't need to have all. You can just have a couple. You don't need to have Prime. I think Prime's a great deal. But anyway, you still don't need to have so many of them. You still need to have only some, and make sure that your money is getting channeled in the right manner. Right. Only then will you be able to create an investing habit. See that money only then, once you see that money starting to make money, is when you will be motivated to do a lot more. Right. So the strive to do more, the last point that I was talking about, can only come if you are creating an investing habit out of your savings habit. See, many people start a monthly SIP, and what we tell them to do is that whenever you're able to get a bonus, whenever you're able to get some surplus, uh, keep that aside for any correction or any opportunity that can come up. And usually this happens. You will get 6 to 8 opportunities in a year to invest like that. Up until then, you need to make sure that you're in other asset classes like debt, precious metals, so that you can take advantage of it. Right? Because you'll see relative performance far more better, so you're well protected. So whatever you make gets preserved. Right? It's a hedge. Right? Third point, step up your SIP whenever possible. Now, every year when you get an increment, make sure that you are able to step up your SIP. That's very, very, very important. I have some stats to show you how fast you can reach a crore, but stepping up your SIP whenever possible. If it's not possible, then it's completely all right. But you still need to strive to get to that point to say, yes, I will want to step up my SIP in the next 1 year, in the next 2 years. But stepping up your SIP is extremely important. Right. Now, getting a few things right will pay off. First thing I would say is to insure yourself. So Milestones2Wealth does make sure that you are having the right insurance. You are not overpaying for anything. We do review policies, and then we make sure, is that policy working for you or not? Right. So the first thing is to make sure that you need to insure yourself. adequately. So we will be able to review that for you. Second, within the insurance, we will say, okay, this is more important for you. We think that you should have that. And you'll see the merit of having that. So naturally, some will get diverted towards that. Some will shut, some will get diverted towards that. Right. So that's the most important thing that I would say is the first is the base upon which you can create a savings habit. It's the base upon which you can take risk when it comes to investing. Otherwise, you will not be able to take that. You will not have that ability to take that risk at all. Like second is to have a budget, know where your money is going, know where your money is going every month, is going every quarter, is going every year. Only then you will be able to take a proper estimate, a proper assumption of how I can cut my costs at the same time, how I can redirect it towards other avenues. Now, diversify your savings. Now, most of Indian investors in India have parked their money, and this is can come also from the previous generation, is that most of the money is in real estate. Right. So we are a very real estate heavy wealth household. So naturally, you have to create more and more space for financial assets. Right. And financial assets like mutual funds, they are great ways for you to diversify your savings because it's a very simple investment vehicle. Right? They do the job at a significantly lower cost. You're getting the work of at least 15 to 18 analysts that they have. That's how big their team is. Then it goes to the fund manager, then it goes to the investment committee, only then it gets approved. So there's a lot of checklists that take place. AMFI is already on them, SEBI is also already on them. So it's a completely regulated investment vehicle which you should use to diversify your savings. Right. So financial assets is what I'm talking about when it comes to diversifying your savings. Right. Then most important again is to manage your loans well. If you're having a loan, then you should spend most of the time in the initial time to pay off that loan, right? Because ultimately that is taking away future savings for you. Imagine that EMI money going into mutual funds that are earning somewhere between 12 and 15% over a long period of time. Had you done that at 12%, you're able to double your money every 7 years. Right? So that is the optionality, that is the opportunity cost that you're going to lose out if that loan keeps on going for you. So initial time you should spend a lot on paying off that particular loan. Be debt free. Don't over lever. Only then you can create space for you to continuously keep saving more, right? And plan for your future, which means that you have to be disciplined for your insurance. You need to make sure that there is no excess that you do. There is no reckless spending that you do. For diversification, you need to be very, very consistent, right? And we will help you in being consistent. We will make sure that you're investing at the right place. You're seeing the results, and only then you can take that call. Only then you'll get that confidence to say, yes, I will strive to do more. It's easy for me to strive to do more because I'm able to see that result. Right? Most importantly is setting up milestones, right? You can only plan for your future when you set milestones, right? So we have this target that internal targets, let's say 2, 5, 10, 15, 25, 50, and 1 crore. Like these are the milestones that we've set. These are the milestones for whom we are currently working with. These are investors that are already on the program for whom we are working for. Now, the most important aspect of this entire thing is that when you set a habit, it becomes very difficult for you to get into a particular rhythm. That's why 2, 5, and 10 are the most difficult set of investors to work with because majorly they are first timers. They want to see good evidence to come in, and they've been able to see good evidence that comes in. But your initial journey is going to be difficult for you. After that, it's going to be a cakewalk because you've already seen that evidence. You know what's going to happen. You know what to expect, basically. Right? Avoid credit card spends. Right? Uh, See, in this day and age, for the last 10 years, what has happened in India is that we have had a credit driven growth cycle, right? And today, if you look at RBI data, if you look at any data published by them, they say household leverage is at the highest level, right? So it's very, very important right now for you to make sure that you are not on that side itself of being over levered. You can lever up, but make sure that you're able to manage it so well that you pay it off as soon as possible. Your car loan, your house loan, all of that is going to take away your ability to save in the future. Right? Though they are emotional needs, but they have the ability to take away future savings. Right. So now we look at that asset allocation because I think it's very important for you to know how much of each asset class to have and what is the perception. See, cash is the perception is that it's a safe haven, but it does not beat inflation. But the function majorly is that it is completely liquid in nature. Right? It has to be liquid, so you can't think that I'm going to make money off this. You cannot think that okay, I need to go to a bank that is giving me more and more. So you can't do that. It's meant for liquidity. Even if you earn some amount on it, it's okay. Main function is that it should be accessible as soon as possible. Right? Then you have gold, silver. It is a hedge towards inflation. Today, inflation is very high all across the world. You are seeing that the dollar is not as strong as what it is. China and Japan both are dumping the dollar. So naturally, you need to have an alternate currency always because geopolitical issues will never go away. And after COVID, it has become more and more uh, prominent that yes, there are going to be issues. There's a clear dichotomy between countries. So yes, it is an inflation hedge, and yes, it is an alternate currency. Right. So you should have somewhere between 5 to 10% of your net worth in that. 6 months of expenses should be in cash or cash equivalents, anything of that sort. Right. Your FD is meant to preserve capital. You should have maximum 20% of your net worth. This chart again is a template. This doesn't mean that you have to do the same thing. Once you get in touch with us, we'll make sure that depending on your goals, depending on your risk appetite, how much of what you need to have. Right? Don't get carried away by this template. Even on Google, if you put a template or if you just ask anybody, there is no one size fit all. It has to be tailor made for you, and we will tailor make it for you. Right. So fixed deposit is meant for capital preservation. It's not going to beat inflation in the long run. You have to go with that assumption. It does not. So it's just meant for capital preservation is for you to get some sort of a regular income on it. And it should not be more than 20% of your net worth. Right? Now, real estate is an emotional security. Like I said, uh, this comes all the way from our forefathers that yes, it is an emotional security. It does give you that sense of financial stability, but it is extremely capital intensive. And the way property rates are going on, real estate is at all-time high, equity is at all-time high, gold is at all-time high. So it is extremely capital intensive, but it should not be more than 40 to 60% of your net worth. Right. But committing to it will definitely take a toll on your mind, definitely take a toll on future savings. So make sure that ideally what you should be doing is once you are very, very comfortable with financial assets and that money that you've put in financial assets actually works for you, that you can use for real estate, but never the reverse, right? Because at that point you have a very, very big base because you've saved for a long period of time. You have a big base and then you can use it, right? So you're not giving up on both, right? But you're just delaying one aspect of it. You're just delaying some aspects. That's it, right? Then there's equity instruments. Yes, naturally they are higher. They definitely give you high returns, but comes with high risk. That doesn't mean that that's the only asset to look at. Definitely not. There are periods in which equity does not do very well. There are periods in which equity does very well. The last 4 years, equity has done very well. We don't think that going forward, the incremental returns can be very high as what they've been in the last 4 years. So naturally, you have to diversify. Right. That should not be more than 80% of your net worth. Yeah. But the whole reason of this is to make sure that you understand the function of it, what we think of when we think of these asset classes at Milestones2Wealth. Second, what is the perception that is actually uh, uh, with people, and how much of it should actually be there in that particular asset category, right? But this we will work on this with you and tailor make it only for you, right? So we will have a proper plan that takes place for you, so that you have good direction and clarity as to how much you need to spend, how much you need to save for that one particular goal, given your current uh, asset split up, right? So we will do that for you. You will not, you don't need to stress about doing it. We will do that for you. We will just ask you for certain data points which you can share to us, share to the point of contact, and he will give you clear direction, clear clarity on where your entire household wealth is headed, right? Now, this is what I was talking to you about, fast track your journey to a crore. Now, if you see your first 7 years, it takes you first seven, if you grow at 12%, if you're just investing every month, you don't do any SIP, nothing. It takes you about 8 years to get to a crore. But you see the magic after the next crore only takes you about 4 years, right? And then the next crore, that is the third crore, takes you 3 years. So by the time you reach the 20th year, you're adding a crore almost every year. So when we say that no, we want to set a target for you at 1 crore, we are actually setting a target for somewhere between 6 and 7 crores for you, having moderate expectations. The only thing that you have to make sure from your side is to be consistent. That whole part of being consistent, to make sure that you are participating, you are contributing every month. That can happen only when you have clear direction and clear clarity of your goals and of the plan, so that once you start walking, you will act on that particular path, you will start seeing the results of it over a long period of time, right? So you can look at this rule. It's 843. If you're able to contribute 70,000 rupees a month, growing at 12% per annum, and this is all public data, and we've seen this happen also. So none of this is just Excel. We are practicing it, and we are working with investors for them to reach a crore, and working for investors who have crossed a crore, and we are on to them for the next goal, right? So 843 is what you need to remember, right? So how can M2W reach a crore? One, we will help you understand your potential, which is what we will do by giving you that clarity. So we take multiple tests. We have this test of your ability and your willingness to take risks. Second, there is a financial health checkup. So when you go to the doctor and you're going through, something, uh, hopefully not as bad, but yes, you every year you do need to take that financial checkup, and health checkup, sorry, where they will take your blood test. You will see everything that comes to you. Same way we will take a financial health checkup for you, where we will see, okay, how much of it has been there in this asset class, how much of liabilities are there, and then give you that sort of number that you can work with, that this is your potential, this is how you can grow to your potential, and the rest is on you. Staying invested is on you, maintaining patience is on you, and doing more is on you. Right side is us, left side is you, right? So we will help you, that clarity that you will get about your potential, and the direction that you will get to grow your potential will come to you from our side. That will help you reach your that goal of 1 crore, which ultimately will take you to 6 7 crores. And what you have to do is make sure that you're being consistent, you're staying invested. We will take care of any market peak that gives that opportunity to exit, uh, and we will make sure that you're participating in the right places, right? And doing more is completely on you. Once you're able to get that clarity of where your expenses are going, naturally you will strive to do more. Right. So now I have this very important behavior model. So in a boring market, usually what we try to do is that we do a mix of lump sum SIP and step up SIP, which is very, very important. Uh, SIP, I would say, is the base. On top of it, you can do lump sum, you can do step up, whatever, but the base has to be SIP. And this comes in a place where there is no incremental big returns that come in. And boring markets take place across all asset categories. So in one market, there can be an exciting, in one category, there can be an exciting market, but in the other category, there might not be an exciting market. Right. So debt, gold, not very exciting. Now it's turning out to be very exciting. Flip is happening on the equity side. So what I'm trying to say is that the participation level goes significantly higher in a boring market, and we will always find boring markets. We will always find boring markets across all asset categories, right? So when do you reap the benefit? You reap the benefit only in two aspects. One, when it peaks out. Second, when you're very close to your goal, that has to be met. These are the only two aspects where we take a big sell call to say, yes, I think it has reached over optimism. We did that for public sector and infrastructure funds for whom we had invested. And second, when the goal is met, when you're closer to your goal, that is when we will start taking that call to reap benefits. Right. So this is the entire behavior model. So now I will open the floor for Q&A. So you can put your questions in the chat box. So there is a question, what is the fee structure? So there is no fee that we take. If you do come on board with us, we choose regular plans to do, but there is no fee for consultation. So whatever we get paid for the AMC. My question is that the investment will be in mutual funds or across all asset classes, or is it going to be based on risk appetite? Based on risk appetite. So we will first take a test to see your ability and willingness to take risk. Once we get the number, then we will do it based on that particular risk profile, and it will be across all asset classes. So in my source domain, what will I be guided to buy? Yes, you will be guided to buy mutual funds. We do not do stocks. We do not think that right now uh, you should be doing stocks. If you're interested to do more in stocks, then we have a PMS, which is semi-regulated. It comes, so the minimum investment is 50 lakhs. So if you're interested in that part, but Milestones2Wealth will completely be on the mutual fund side. We will open the account for you. So the process works very simply, that we do all the account opening for you, and whenever there's something to invest, it doesn't go through without your approval. It all goes through BSC and NSC, so it's completely, a process is very, very tight. Hmm. Thanks. It's a nice question. Thank you so much, sir. How do you assess how do you take the risk assessment for the investor? How frequently you advise about the investment process in SIP? If we move if we move funds in SIP less than a year, at least it remains. We are a majorly buy and hold. When we take a particular decision, it goes on for 3 to 4 years. There's no short-term business that we do. There's no trading of it. It's proper buy and hold wealth creation. Fundamental It's more of a bottom-up fundamental approach where we also have some amount of top-down to say, okay, this is what is happening on the macro side. This is what an investor needs to do. So, for example, back in 2018, when we were able to take high risk, that time we were overweight on public sector commodities. Then in 2020, we were overweight infrastructure. Now we overweight on the large cap side, and we've been overweight since 2022. So it takes 3-4 years for some investment theme to play out, some idea to play out, and only then we take that call to say, if there is over optimism, we take that call to exit. If there's no, then we let it run depending on the goal, what goal has to be met, then we will make changes. But overall, it's long term. There's no short term trading that we do with mutual funds. And second, we take a risk test. So there is a test in which you have multiple questions to answer, and those questions will be based on market scenarios, as to what you would do, what is your thought process, all of that, and then we will get a particular score, and we work particularly only on that score. So I will button my account. I will have to. No, you don't have to add fund. Everything will go from my bank account to uh, the mutual fund. If we are already doing direct investments, do we need to redeem and change it to regular based on the advisory? See, if you're doing direct, we are not doing direct, but you can have your portfolio reviewed by us. If there's something that you need to hold from your side, you can hold. If there's something that you can, sell, that is a call on you. But you can get your portfolio reviewed. I'll just put the number. Yeah. You can just send us a hi saying, have this requirement to review my portfolio, and somebody from the team will get in touch with you. So I will buy in my account or add funds. No, it's a straight. So you will get a link from BSE that there is a transaction that we want to place for this particular fund, and your bank account will already be linked once you do the onboarding process, and it will go from that bank account only. Yeah, I've put the slide. If you can see the number, let me just try and put it here. So I've put in the number. You can just take it from the chat box. Okay. Contacted your team for starting Milestones2Wealth account very recently, but they have not gotten back. Can you please advise on the next step? Let me check with the team, and by today, in the next 1 hour, you'll get a reply. Let me just check with the team as to what stage of within the process they are with you, and I'll have my team reply to you now in an hour once we're done with this. Thank you, everybody. Thank you so much. If there are no further questions, we'll keep the floor open for another 2-3 minutes, and then we can close. Thank you so much, everybody, for your support. Thank you so much for joining in on a Saturday morning. Please do drop us a review on the link, uh, and hopefully we'll have a very, very fruitful relationship going forward. I'll keep the floor open for another 2-3 minutes. No problem. Yes, that is us. Smart Wealth Research is us. Yes. Pragati sir, if you can just put your email ID here, it will be easy for me to see who it is mapped to. So this might be for mandate creation. And once the mandate is created, you will get the fund. So don't worry much about it. I think this might be a link that is to create a mandate first for SIP. Then you will get the link. Nothing will go without your approval. Okay. I don't think you're getting any further questions, so we can close. So thank you all for joining in on a Saturday morning. Have a great weekend ahead. Looking forward to seeing you on the next webinar. Thank you so much.